myself Vaibhav. In today's session of Visual JForex, I will be starting afresh with the new indicator named Absolute Price Oscillator APO. We will see how we can design and develop the algorithm using this indicator on the Visual JForex platform. Let us get started for the day. This platform has been developed by the Decoscopy Bank SA, and you will find this indicator listed amongst momentum indicators below the ADXR, which we had seen in a prior session. So here is the APO. I had also done the preliminary introductory session on this indicator during the prior series, and if you want to look into its technical details, how it is calculated and how it functions in a detailed manner, you can refer to that video as well. In today's session we will be looking at its functional aspect, and we will try to see how we can design the logically sound algorithm using this indicator. We will have to take the instrument of our choice and then define these parameters depending on which we will get the output value. So first I will explain to you the logic behind the algorithm which we are going to develop on the chart, and then we can add the indicator blocks as well as other blocks as per our requirement on the Visual JForex platform. So here is the Euro USD chart on the hourly time frame, and the APO has been plotted here. And as you can see, we have the APO guiding us in looking at the trend of the underlying instrument. Whenever you see that the price is in decline, the APO is also declining. And whenever there is a price rise, the APO follows suit and it is in the bullish trajectory. So this indicator is basically used to look at the price formation. We get a clear cut idea of the trend, and then accordingly we can trade. So whenever you want to do the with the trend trading, you can consider this indicator, the APO. This is fairly simple to understand. It basically looks at the difference between two EMAs, and you can even choose SMS. So two moving averages. It can be EMA, SMA, or any other type of moving average. And we take one of shorter time horizon and another of longer time horizon, and subtract the longer one from the shorter one. So if the moving averages are on the rise, if the price momentum is strong, you will see that the shorter time frame moving average is going to be trending on the higher side, and from that if you deduct the longer time horizon moving average, you will get a positive value. So you have the positive values whenever the momentum is strongly on the bullish side, and negative values whenever we have the bearish momentum for the underlying instrument. So this indicator gives you an idea of the momentum, and we will be looking at the buy entry whenever we see that the APO value has crossed in the positive territory, that its output value is now above zero, whereas just last hour or couple of hours back its values were negative. So we want the buy trade to be initiated whenever there is a change of momentum from bearish side to the bullish side, and we want the sell side trade to be initiated whenever we see that the momentum is now shifting from bullish to bearish. So the output value is also going from being above zero to below zero. So we will utilize this indicator that way, and as we will be limiting the window for the trade execution, we will just look for a first or second hour after the trend change for the execution of the trade, and after that we will simply sit on the sidelines till we have the fresh formation, and we will only try to initialize the trades during the initial momentum change. So that's how we are going to get involved for any trading opportunity. And at the same time, there should be enough of momentum. For that we will have to rely on the price action, and I think we will take a cluster of historical candles of the hourly time frame, and also we will be looking at the last hourly candles price action. Whether it is bullish or bearish will have a strong impact on the execution of the trade, and also we will consider the difference between the high and the low to look at the price for pattern. There should be good enough momentum, and only during strong momentum the trade should be initiated. For that we will have to look at the price action for last couple of hours. So we will now get started with our setup. Here is this visual JForex board. We will use the on candle as our start point. So the first thing first which needs to be done is to get a couple of logical blocks if else for doing the instrument subscription, and then the position amount needs to be defined at 0 to make sure that only one trade is executed at the time. So for the instrument subscription we will have to take the default instrument first. Default instrument is Euro USD, and then match it with the candle instrument. Here is this last ask candle instrument. Okay, it should be first input equals second input, and again we will match the candle instrument with the instrument of our choice, which is Euro USD for this session. If you want to work with another instrument, you can do that. You have to only change it in default instrument and then fill up the same instrument in this input value, second input value. Now let us take one more if block. So here it is, and here we will define the position amount. All position amount needs to be 0. That means whether the pending orders or the open position should be 0. There should not be any pending order or any open position on the account whenever the order will be placed for this algorithm. So here we will take this. Now default instrument will remain as it is. Time period needs to be changed, and this will be made hourly. Okay. Shift 1, it will be 1 as we will be looking at the data for the last hour after that candle has closed, and fast period remains the default value 12, slow period also 26. Now here you can change the moving average type. You can take any moving average as per your convenience. I will simply keep it simple moving average. Then depending on that we get the output value. Now as we will have to do the comparison, I will have to take one more APO block, and for that I will have to add this one, and as we want the trade to be initiated during the first 2 hours, so I will take shift value 3 here. First I will change the period for this candle to hourly. Okay, shift will be made 3, and fast period slow period remains the same, moving average SMA, and we have this now out 10 and out 14. Okay, and then to look at the price action we will have to take the info components. And we will need the historical candles to look at the volatility for last couple of hours. And for that I will take four candles of 1 hour each. So here this needs to be changed to hourly. Okay, shift will be 1 and this candle amount will be 4. Okay, and since this output is an array of data, we will also have to take the loop viewer to retrieve individual values as and when we require. So this, and we will take this as historical candles for volatility. Okay, and then we also have to take single historical candle to look at the last hourly price action loop. Okay, and this uh, default instrument remain as it is. Time period needs to be changed to hourly and shift value will be 1. So here we have got so far, and then to pinpoint the exact entry and exit points, as usual we are also going to need two 10-second candles. And this now need to be customized to 10 seconds. 10 minutes need to be changed, and this will be shift 1 and shift 2. Okay, so these are the minimum blocks which we are going to need for designing and developing our algorithm. Now we head back to the chart to see what kind of values will be good enough to be considered as minimum conditions. So to that extent, we can look at the price formation and we can do some observation. And I think whenever we see trend change, suppose now if we look at the price action recently, so here you have the output value for APO dipping below 0 at 10 GMT, and prior to that the APO was in positive territory. So 10 GMT is after closure of this candle. Now we have defined the time window for execution of the trade for 2 hours, and we need to see that last candle should have closed in red, that is with price losses, but that's not the case. So here no execution will happen. And then next hour we do have this decline. So now this time around we can of course look for the initiation of the trade, but I don't really think that looking for the market open is a good enough idea. So instead of going for the market open, what we will do, we will take into consideration the highest and the lowest value for last 4 hours, and then we will look for the placing of a limit order for the sales trade closer to the highest value of this cluster. And to make sure there is good enough volatility, we will also define the difference between the high and the low, or even we can look at the last hourly candle closing price and opening price different, and we can also define their minimum difference, that the difference should be more than the minimum required condition which we can define. So we will set these two logical requirements, that there should be enough of volatility and also our order should be placed closer to the high value of last 4 5 hours 4 hours, and for that we will be using the pending order, pending open block also. So this is the logical structure, and for the today's session we will stop here. I have added these minimally required blocks, and then in next session we will pick it up from here onwards, and we will add calculation expressions first, and then as the requirement arises, other logical blocks also. So that's it from my side for today's session. I thank you all for joining in. Do subscribe to the Ducoscopy webinar channel to stay updated on the market developments. See you next time. Till then, goodbye.